Hey YouTube, my name's Neil Hamilton, and this is another episode of Get Technical. We're about 10 minutes exactly on the dot late. At least we can be late with round numbers. The market loves round numbers, right? Thank you, Dylan. 13, spoiler. If you guys haven't read or seen Hamlet, stop the video now. 5, 4, 3, 2, 1. Hamlet dies. He dies at the end. How are your ears?
I'm covering them. I don't want to hear the ending of Hamlet.
Oh, okay. All right. Well, good night, Prince. All right, guys. Welcome to Get Technical. Let's get into it and look at some tickers. First and foremost, I've got SPY up. What I like about SPY right now is that we did get an open higher than our previous open. That's nice to see. Did we get that with QQQ? No, we didn't get that with QQQ. Let me delete all this hullabaloo here. And we're just looking at the NASDAQ ETF, QQQ, which, as we know, because we watched the show yesterday, hit a double top and had to reverse past this little neckline to about this point. And where does that line up? None other. It lines up with none other than our special friend, the 50-day moving average. 50-day moving average here. Looking bare, flaggy. I have to agree. Why do I have sort of conviction saying meh? I think we still got some more downward to go because we haven't really gotten oversold yet. We were due for this correction. We need to go down a little bit. And is it the textbook definition of a correction? No. So I before I went on live to the 100 million viewers that we get here on Get Technical on the Benzinga YouTube, subscribe, also hit the like button. I Googled the actual definition of a correction before I went around bloviating like some other people, misusing the term. A correction is a decline of 10% or more. I don't know within which period though. You know? So if you're here for those kinds of definitions, I'm sorry. But good gravy. What I can say with a certainty, though, is that if I delete this, it looks like kind of like a backwards bow and arrow where you're kind of shooting yourself in the face. If you can imagine that. What I can say with a certainty is that if I measure from the top of this double bottom and then bring my halfway point to the low of those two middle candles, that it has not fully resolved by the textbook definition of a double. I call it a double bottom, a double top, double top, double top. Same thing as a double bottom, but it's just the other direction. Has not fully resolved until it hits this price point, which lines up with some other important price points. And then just to confirm that we're feeling good about this, we've got the 50-day moving average lining up with that line, and then also the start of this impulsive move anchoring our Fibonacci retracement tool. That line also lines up. So I think we got a ways to go, guys, on QQQ. But there are plenty of other opportunities in the market. We're just staying away from the tech right now. I want to look at one of those opportunities right now. Let's revisit DAC. Looking really good for my high tight flag on DAC. Once again, why is this stock very special to my heart? Because it went up over 100% when I switched my chart to a weekly chart. It went up over 100% in an 8-week period. Each one of these candles is a week. And we did it. And then once it got all the way to the top, it didn't droop down more than when I used my ruler tool here to measure it, than 25%. That's the tightness. We got the high, we got the tight. And then we measure this left height here, which is the height of our high tight flag, with a line. And then we add that line to the point of resistance on the top of our flag, which is the highest that we got. Move this down just a little teeny tiny bit. Set our price target. What do you have here? This is the trade that I set up. Started off with a stop loss around 55.25. And then as the let me switch to a daily so you can see the trade going, the stock moving. As the days have gone on, I've brought my stop loss up to the previous day's close because these are big moves and I'm not giving up any profit. And if I get shut out in the morning, I'm fine re-entering in the afternoon around 3:45 Eastern time, so right before the market closes, and piling in with more money, investing more in this trade, still hoping for that higher price target as long as I'm getting strong closes above the previous candle. What I'm waiting for on this trade as I get stopped out and pile back in at different times through the day as we're doing this is I'm looking for the next phase where this impulse up, the series of just upward moves gets exhausted and we have a little bit of sideways trading. We're going to have a day where it trades down. We're going to have a day perhaps where it either opens or at the very least closes lower than the previous day. And then that is going to be another entry point. But I want to keep all of my profit at the top as well as I can, and then get out and then wait for the next moment to get in and then ride this thing back up. There's no telling how many corrective phases we'll have. It might look something like this. You know, versus just one impulsive move, one corrective move, one impulsive move. But I'm watching it and I'm raising my hard stop loss every day. I have a hard stop loss because I want my shares to automatically be sold if the price goes down to a certain level where my profit gets erased. I work all day. I can't pay attention to the charts all day. Even though I'm working at home, I'm in front of my computer. I just can't watch the charts all day. So mental stop losses and even price alerts where I get the little ding don't really work for me, because if it happens in the middle of a meeting or I'm on a call with producer AB where we're debating over whether you'd rather be on a desert island watching the Lord of the Rings trilogy or the original Star Wars trilogy over and over, then I'm not going to be able to leave that conversation to look at these.
With the Star Wars, you'd have more movies, so you'd get less bored of them, I think.
No. The scenario only works if you do original trilogy.
Oh.
So it'd just be 4, 5, 6.
But original 1, 2, 3.
Wow.
The prequels, because they're original. It happened first.
Okay. What year were you born? I'm not allowed to ask you that. You don't have to answer that.
Yeah. Padawan time. In Padawan time or Earth time?
So you're basically or do you like the prequels more than the original, like the older ones?
Yeah, of course. The new graphics, they have better. You got what's his name playing Anakin? Great stuff.
No one knows that guy's name.
Christensen.
Hayden Christensen.
Hayden Christensen. See, no one knows his name. I knew half of it. You knew the other half.
All right, let's keep going. Yeah, so anyways, this is my trade. I'm really big on this one. It was pointed out to me, however, by one of my Twitter friends. When my mom asks me, Neil, what have you and your friends been up to? I tell her about all the adventures I get up to with my Twitter friends.
Breaking news. KFC, Kentucky Fried Chicken, just announced it will start accepting Dogecoin as a payment.
We don't have a breaking news thing on here. AB is still trying to figure out his place in this situation. I'm sorry for cutting you out. I'm still...
Wait, can you just search KFC on Twitter to see if that's see what people are saying about it after this?
No. I'm so I'm nonplussed.
Maybe just go to latest and we'll see.
How long have we had that video clip?
The breaking news?
Yeah.
We loaded it in just for this, just for Dogecoin news.
Can I buy with my Doge, please? We accept cash, card, and Dogecoin. Well, let's keep going. Don't want to get some terms of service here. I mean, everyone's just really scared of this lady. I don't know what it has to do with KFC.
Well, we'll get that.
Here, why don't we just look at Dogecoin instead of my trade? Forget about my trade. Who cares about my trades if Dogecoin and KFC are in the equation? Oh, how breaking is that, Aaron?
It's so breaking that it's unconfirmed.
Buy the rumor, sell the news, guys. Yeah, John, I saw your tweet. All right. Can you just can you just play with a Rubik's Cube for like 5 minutes or something? This is the last time this plant was seen. Hit the like button or I will never water this plant again. You know what to do. Look at how screwed up this plant is. Oh, sheesh. Are we ever going to get to charts? Let's see. Everyone likes Metallica, blah, blah, blah. Stupid. All right. Everyone's tickers. I wanted John's. All right. CLF. He said the magic words. Mr. John. Mr. Bald. CLF is a rat snack on the daily increment chart. CLF. Steel. Typed it wrong. Let's get it this time. Why is it a rat snack? Because it's been sold off and the man expects a bounce. The man wants to see a bounce. Looking at Cleveland Cliffs. I'm on the 10-minute. That's why. Okay. Let's get on the daily. Let's get on the chart that the man told me to look at and delete all of my drawings because I have been here before. Fantastic recovery here. Looks like it just hit the 50-day and just kept on going. But I want to see if this one has had one of those big bottoms. Yeah, okay. So we're going to have some key levels here that we got to watch. So I'm going to use my Fibonacci retracement tool, which I'm doing the shortcut for it. So if you see me just get it really quick, the way that I'm doing it is I'm pressing Alt F on TradingView. You can also do this on your Benzinga Pro platform in the advanced charting section because that section is powered by TradingView. So you get the same charts, the same tools. So with my Fibonacci retracement tool, what I'm doing is I'm looking at this price structure like this. Downward trend, impulsive move up, but that was what I often call it the swan song on this show. I don't know what other people call it, but there's usually like a last little like push up before we finally tumble down and find our bottom. Now in this case, we had a little bit of a growth, a little price increase there, and then we started coming back up. So as you start to see stocks that have been really thrown in the dumps and have really been consolidating with a broad base like this, they have potential to explode a lot. The reason for that, I am in the negatives here, but so don't let these prices throw you off. I'm just using this as a space to draw. The reason is that a lot of the sellers have already taken profit. This is as low as it's going to go. So that we're really just establishing a base for buyers to absolutely take over. And I use this point as my reference point to draw a rounding bottom pattern. So looking broadly at CLF, which is always best when you're looking at your stocks, look at the big picture first. So going back in time, removing my moving average, so I see nothing but price, removing my Fibonacci retracement, and just looking at, I'm going to go ahead and switch to monthly so I can consolidate or condense time and see more of what the history of the stock has been. I can see that's just been a massive sell-off, just a massive downward trend. Now, something to take note of is this swan song area or this final impulsive move before we got down into our broad base hit another level. So this final move hit resistance that also occurred in the past back in 2009. So a very long time ago. So what I'm going to do now is draw a line there so I don't forget that point. because past resistance is also going to be resistance again. Price has memory. Investors, algorithms, hedge funds, you name it, market participants that move stocks remember these points no matter how far back they go. No matter how far back they go. So I'm drawing this line because I know that all of this great stuff is happening here, but I got to know that there's a wall ahead. All right, so very important. That's an important level to watch. 26.94 CLF. That's not to the tick in terms of to the actual cent. I can probably bring that down a little bit. I'm going to bring it down for this most recent one, knowing that actually I'll draw a rectangle because this is one of those things where you really want to draw a resistance zone as opposed to just a straight up line. So let's get the rectangle tool out. I'm going to star the rectangle tool so that it's in my shortcuts. Under the paintbrush menu, rectangle, hit star. Now it's in my shortcuts. And I'm going to draw from this line up, knowing that this, just about here, and you guys should be able to see it, but, Lord. You guys should be able to see it, but I'm drawing the top of my rectangle just about to the highs of these monthly candles here. We're still on monthly. CLF, Cleveland Cliffs. This is a steel stock. So this is a big holding in XME, which is the Spider Sector ETF for metals and mining. So what goes on with this stock really affects XME. Which has strength today. Actually, I have my sector ETFs here on the right, which you probably can't see very clearly. I'm going to expand this. Maybe I usually have to zoom in. Zoom in the wrong window. I'm going to zoom in a couple times just to put everything in context for you guys. I've got all my sector ETFs. Now, some of these are redundant because I have the Spider ETF, which often most of the time starts with an X, I think almost all the time. And then I also have the Vanguard ETFs. I like the Vanguard ETFs because they usually have nice dividends. So I use those for my investments. But I'm going to order this list. I also have Bitcoin and Ethereum here just so I don't miss them. So those are like my crypto ETFs until I actually have ETFs for that, which I don't know if they're out. If they're out, I don't care. I'll find them myself. You don't need to yell at me in the comments or in the chat. It isn't the biggest mover. So the biggest mover today is XLE, which is going to be dirty energy. So it's going to be like oil and stuff. But if we get down to XME, it is among the larger movers. We've got about 2.6% on XLE, and then XME is at 1.3. So it has sector strength. It's not the biggest sector right now, or the fastest moving, but it does have sector strength. So we're still looking at CLF. We know that we've got this zone ahead that we're going to watch for. So now let's go to the next step. Let's drill down. We're doing multi-time frame analysis. We were on monthly. Now we're on the daily. Let's take a look at what's happened more recently. Actually, before I do that, let's look at the big picture. And the big picture is this. Arc tool. Big, huge rounding bottom. Still a ways to go, but if we do break through this level of resistance, this is something you should watch. If you're watching Cleveland Cliffs, we got a ways to go before we get there. There's no telling whether or not we will, but if we do cross this resistance level with strength, we're not super oversold on the RSI, you're looking at potential for a massive move. You're looking at potential for a move to the tune of 94% upon a breakout. Of course, it's not going to be straight up. It's going to have, where's our little paintbrush? It's going to have impulsive and corrective moves, but patterns tend to resolve. All right, so let's look at the daily. This is a rat snack because it's sold way off, and then now it's just about bite size for a hungry little rat to come in and make some money. So CLF, what I'm going to do here, because I mean, you could actually say that this is like a reversal pattern here. But I'm going to do a parallel channel. We're going to do a channel. So I'm going to get my, what is this called? Parallel channel tool. And I'm going to start at this point. Why am I starting at this point? Because this is the swing low. That was the first low before we got into this broad uptrend. And then I'm going to draw my next point on the next low. Now, what happened when I did that, actually, let me just use this straight line first to demonstrate a point. So what happened when I did that, when I went from this swing low to this swing low, is I noticed that these lows are deviating away from my sloping line of support that I've just drawn. Now it's time to adjust this line. This is no longer the sloping line of support that is being respected here. So I'm going to drag this point to this swing low at about 1591. And then I'm going to bring my starting point to about 1271 to capture this trend that we appear to be in, this sort of channel. I just deleted that arc that I made so we can get a clearer picture on this, as clear as possible. And then now that I have that, I'm going to use my channel tool. And we have a really good technician here. A really good technician here that's probably going to have another way of looking at CLF that I'm very interested to see. And he's probably, something tells me, I have an inkling that he might be using a different tool to analyze it. So just 1 second. So now I'm going to use my parallel channel tool. I'm going to bring this up to the highest point, so that now this starts to look like an actual price channel to me. An actual price channel that we're trading within. So now the question is, where are we buying? Where are we selling? Well, number one is we're not terribly oversold yet. So it's still looking like a possibility that CLF will continue up. But we did hit this point of resistance from just the other day on April 1st, 2021. And did we exhaust our little reversal here? Let's see. Still a little ways to go. And the way that I'm doing this is I'm just measuring the bottom swing low here and then going back up to the previous swing high. But I'm going way over time and just drawing stuff on a chart. So I want to bring on our guest for the day. Guys, it is my pleasure to welcome to the show. I know I'm going to mess up the guy's last name. So Jake, please forgive me. But I believe Jake Wujastyk of TrendSpider.
Well, that was about as good as it gets for pronunciation. So A+ on that. Exactly how you say it, Wujastyk. So that was perfect.
Wow. All right. Well, thanks, man. How's everything going?
Hey, it's good. It's good. I heard you were talking a little bit about CLF. Been interesting to see all those names just absolutely ripping over the last couple months or several months, really. So yeah, that's definitely been an interesting one. US Steel, same thing. Just, I mean, this market is just not so much loving the growth names anymore. They're loving kind of these the up and coming names that have been just not up and coming, but these names that just have been beaten down for so long. I mean, CLF back in 2010, 2012, this thing was way up in the 40s and 50s, and now we're way below. So it's definitely been interesting to see that kind of cycle of money starting to flow into these names that have been beaten down for years. And it's just kind of the cyclical nature of the stock market and kind of money flowing in and out of different areas. So I was going to mention, I'm happy to share a couple things on our side of things on TrendSpider and kind of highlight some interesting things on both technical but also seasonal side of things that I'd really like to use on the platform, and just touch on some of these monthly setups. I mean, we did just have the monthly candle close last week, so kind of fresh into these new candles. So is there a way I can share my screen here?
Yep, it's just like Zoom. On the bottom,
There we go.
there's a share screen thing.
Okay.
And then so Jake, a lot of you guys probably know Jake already, but Jake, could you just tell us a little bit about yourself and TrendSpider really quick?
Yeah. So my name is Jake Wujastyk. I am one of the founding members of TrendSpider. If you're not familiar with what TrendSpider is, it's a technical analysis platform with some non-technical tools as well, such as seasonality, insider trading tools, analyst estimates tools, all things that you can complement with your technical analysis. So if you guys can see my screen here, this is the platform. I know sometimes when I'm on Benzinga, they say, some people say, hey, I can't see that well with the white background. But unfortunately, if we went dark background, some people would say the same thing. So today I'm going to use the lighter background versus yours. So hopefully that's okay. And yeah, so TrendSpider, we've been around for about 3 years. I've been involved in the markets since I was kind of my last year of middle school and beyond. Just have a passion for it. This is more of something that, especially now with TrendSpider just being kind of my full-time thing. Trading is something I like to do as a hobby, but just with everything that I have to do on the day-to-day side of things, it's just impossible to try to trade and do TrendSpider full-time. So I'm more of a swing position trader. I'm generally looking at the daily, weekly, and the monthly. Not a lot of the time am I going below the daily. And yeah, so I'm not necessarily having to be at the screen 7:30 my time in the morning. I'm in Denver to watch the open, right? Sometimes, I'm more focused on those longer term setups because at the end of the day, they're all fractal, right? A setup on the monthly is the same as a setup on the 10-minute. It's just a different time frame you're looking at. So one thing that I was going to do was just touch on CLF. If there's any other stocks you were looking at that you want to take a look at on TrendSpider, we can. I have a couple charts in mind that I wanted to touch on as well. We can dive right in if you want.
Yeah, I would love to start with CLF. Honestly, that one has come up quite a bit on the show. And like you said, X as well. That's the US Steel Corp. But would love to get some fresh tickers in. So okay. Whatever you have is prepared is great.
Let's do it. Okay, so let's start with CLF. So one thing, and I saw that you were using trend lines quite a bit. One thing that we have on the platform that I like to use a lot, especially on a chart that I just haven't looked at in a while, CLF is one that I kind of have on my phone, and I look at the daily price action from time to time, but I haven't really seen a long-term chart. One thing that I like to use is the auto trends, because then I don't have to go in and start drawing lines on my own. I can go in and just click on trends, and some of these lines will automatically kind of pop up here. So you'll see one immediately that's pretty interesting on the long-term side of things. Is this one that kind of back in the 1996 area used to be resistance, then it became support multiple times in a row, and now it's acting as perfect resistance again. So one thing I'll do is just double click on this, turn off trends, and we can kind of look at this particular line here. So if we're looking at this monthly chart on CLF, we are at a pretty important level to get through. So I'll highlight here, this was resistance. We finally broke through it here, shown by this green circle I'm going to make. And then you can see we bounced here twice back in 2008 and 2009. We also bounced here again back in 2013. We tried to bounce, but it ultimately broke down here. And now we're right at this area again, acting as a level of resistance again. So this is something I like to do because honestly, I would have never thought of this trend line. I probably wouldn't have been looking that far back, but we can already tell by these circles, this is a crucial trend line to look at, especially on the longer term side of things. And you can see here that we tested it in March. We then got rejected right at it here on the open of the month in April and pulled back. And now we're literally right back to this area. And this would be a really important line to break through on the longer term side of things. So, on that side of things, if we break through this, it's hard to give price levels on a diagonal trend line, right? Because it's a function of time. If this played out for another year, we'd be slightly higher than what we'd break out here. But if we broke out this month, we'd really want to close above this $20.50 mark. to kind of get things going. And that would be a longer term breakout through this line that's acted as both support and resistance over the last literally 20 plus years. So that's, oh, sorry.
No, so Jake, you mentioned, which I totally missed this trend line in my analysis. So you mentioned it would be very hard for you to typically find this trend line. What is your process for finding it using TrendSpider?
For trend lines or just in general?
Well, in this case, I want to know how you found it on CLF, and then just in general, perhaps.
Yeah, so honestly, I didn't even look at this CLF chart until I heard you talking about it about 5 minutes ago. So a lot of the time, I like to just go back and see, using the auto trends, is there a line that I'm missing? And generally, if I'm looking at a line, it needs to be something that's been tested multiple times, right? Like in this case, it's being tested 1, 2, 3, 4. It's already been tested twice over the last 2 months, and the price respected that line. So the more times that price has tested a line, the better. So in this case, I just wasn't thinking that there was even a relevant trend line that far back. So a lot of the time, this auto trends feature can be more or less an idea generator, because a lot of people sometimes do have a very set way of drawing trend lines, but that doesn't mean that the market isn't seeing something else or respecting another level out there. So for me, I personally, if I was just looking at this trend line without turning on auto trends, I would have probably drawn something more or less, in this kind of sense here, like, maybe we recently broke out. And the thing is, as a human, we can't immediately go in and be consistent every time, right? It's just impossible. And that's what I like about the auto trends, is it will just replicate the same way of thinking every time. So the auto trends has 3 different preferences, right? So each trend line that I pulled up on CLF is connecting wicks to initial wick to wick. If I wanted to change this body to body, I could do that. So for me, I am generally probably looking at a little shorter of a time frame here. So if I were to draw these kind of freehand, I would have probably started back since we bottomed out here in 2016. So I wouldn't have even thought of looking back this far. And that's why it's just nice to turn on trends and it will automatically show up. Now, there's some other trends that are, maybe good to put on here as well. But this is the most relevant one that I saw, just quickly glancing at the chart. Now, if we did break out, this next trend line here could possibly be a level above. And so if I turn off trends, if we did break out, this may be the next level that CLF could move to above. So it's really a mix of using auto trends, I'm generally drawing wick to wick. However, every stock has its own personality. I could find a stock that really just is more of a line of best fit with the trend line rather than just connecting the wicks and the bodies. So I think it's really dependent on what stock you're on. Some stocks respect trend lines really well. Some stocks just have this crazy volatility. Tesla is one that generally you're not going to have some clean trend lines on, just because of how kind of crazy some of that price action is. But, this is something I could go on and do the same thing on the session, or the daily candle. The session candle is a daily candle we used to have before we got our new data feed, but we're back to using the daily candle now. So same thing, turn on trends. This is another thing to look at here. We've got this longer term area, this purple line that doesn't test this peak, but this is a cool thing on TrendSpider you can do. Let's turn these off. And notice how the price action didn't test this peak, and there was multiple wicks here that would have tested it. You can add something called sensitivity. And this is not only on the alert system, we're going to add this to our actual trend lines as well. But as you move the sensitivity over, you can capture a zone rather than just the exact trend line. So you can see here, if I would have just added a little bit of that sensitivity, that creating a zone rather than just a line, this now is including this peak that we saw back in January to make this area a stronger trend line. Because now if we look at it, this is only connecting 2 points, right? And generally, you don't want to see just in the original point connecting another point. You want to see more data points than that. So here, we barely missed this third peak, which would make this trend line a lot stronger. So if you could just go in and create the zone with the alert, you're able to kind of capture some of that margin of error around the line as well. Sometimes what I like to do is I like to do a hybrid of auto trends. So I'll see this, right? Like we've got this trend line. It's only connecting 2 points. But sometimes what I'll do is I'll go in and say, all right, well, let's connect this point to these 2 points here, make it a parallel line. And now we pretty much have that same exact zone. I like to make this dashed just because the price does pierce through a little bit. But that's kind of how I like to draw my trend lines, not just one line, but more or less a zone. And then if you do want to set an alert on the platform, you can go in and create that zone essentially like I have here, except it's the purple area instead of this dashed resistance line. So, if I were watching CLF in more detail, I would be looking for possibly this test above to kind of look at a longer term level, which is around 24, 25 or so.
I gotta say, I'm impressed, Jake.
Hey,
I think you did a good job with this year trend spider thing.
Hey, appreciate it.
Yeah, it's really cool. So let's do 2 things at once. Let's appease the ravenous horde that is YouTube chat by hitting the tickers that they want, if you don't mind. But also, I just want to see more cool stuff that TrendSpider does. So if you can just find creative ways to demonstrate different features, that would be sick.
Sure. So, well, we just went over the trend lines, and one thing that I kind of use pretty often, especially because I'm more of a swing or position trader, I'm using the seasonality a lot. So what
Can you explain that? Yeah.
Yeah. Sorry. What does that mean? It's essentially, it is the ability to look back in time from a historical point in time. I'm generally using the anchored approach. What does anchor mean? It means I'm starting from a specific point in time. So in this case, I don't really want to delete this trend line now because I'm probably going to use this for my content later, because I was like, wow, it's random. But so here, right, we can look at seasonality from a specific point in time. Why would I look at seasonality historically? How has CLF done on a month-to-month basis since 2016? Well, that's when we finally bottomed after this absolutely just waterfall of a move down. So I want to see, since the trend bottomed out, since we started to hit higher lows, how is CLF doing since this point in time? If you're familiar with the anchored VWAP, the anchored volume by price, this is something that Brian Shannon really taught me. You want to anchor from when something is changing, a status quo change. In this case, the status quo is this mega downtrend that happened for about 4 years finally ended. And so this puts in that low before we continue to hit higher lows. So what I can do is I can go back and look at the seasonality, and I can make this a little bigger if you guys want to see it. It's essentially just looking at month by month, and you have a percentage here. So looking at May has a 43% win rate since we bottomed in 2015. And you can see here that I have this little drop-down menu. I can choose which date I want to start and look back for seasonality.
Really quick, when you say win rate, is that like breaking key resistance?
Great question. Win rate is the percent amount of time. So, over 6 years, how many times has May closed green versus April? So in this case, 43% of the time, May has closed green on the month versus April's close. So we can get an idea of, this isn't saying there's a 43% chance May closes green. What this is saying is 43% of the time since we started at the bottom in 2015, 43% of those Mays have closed green versus April.
Got it.
So it just allows us to see, is this a historically strong month of the year since our look back period? So that's what you can get here. One thing that you can also do is you can use some of these other widgets that we have. So we have the mean change percent, we have the 25th and the 75th percentile, we have the min and the max. And this is something I think is really important to highlight as well, because you can get an idea of which months are most volatile. And how am I kind of gauging that? I'm not sure how well you guys can see this this cloud here, but you can see that for April, our biggest move was way up here. Let's see what the raw data is. Our biggest move for April over the last 6 years has been 75%. CLF went up 75% in one April. And it also went down 18% in one of those Aprils we're looking back at. So you can see, historically speaking, what's the volatility in the data points that we're looking at. So for example, May, the strongest May that CLF has ever had is about a 19% move up compared to April's close. The smallest move is an 18% drop. So you can see the difference in, the biggest versus the smallest move over that time frame that we're looking at. And so, looking at this, you can say, well, April is a very volatile month, where May has a little less standard deviation around the mean, right? There's not as much volatility around the average move. So this cloud is really nice to use as well. And it's great to pair with technical analysis. I'm generally just using the min max in the winning period because, one, I want to see what the min and the max move was for that month to get an idea of, is this a pretty volatile month? Is it just kind of right in line with the mean? So that min max window cloud will give you that information. But for me, looking at the fact that we are at this longer term resistance and May is historically, only a 43% win rate, that's something to consider. But that means that still 43% of the time May has closed green. So it's not saying, oh man, our win rate is less than 50% and we're at resistance, we're going to go down. It's just another variable to add into the whole equation. So all of the things in technical analysis are not meant to be used on their own. They're meant to be used like a toolbox. You pull out your hammer, you pull out your wrench. You're not going to fix the whole house with a hammer, right? You need to have other tools. And that's the same way that you're looking at seasonality or auto trends. These are all things that are going to make you a better trader and a better analyst by using all of these together. So CLF isn't giving me too crazy of a data point here. 43%, it's kind of like right in the middle. But yeah, seasonality is something I would highlight on any chart that I'm looking at. Now, before we jump into a couple requests, one thing that I do want to touch on is Spotify. Spotify is a trade that I took today, and I want to kind of explain why I took the trade. So I do like to use volume a lot in my analysis, but I also like to look at repeating patterns, whether that's a repeating pattern after earnings or after an important announcement once a year, after, let's say, Apple's, annual product launch, is there a pattern around that? With Spotify, I found a pretty interesting pattern over the last 3 earnings, and it's playing out for this 4th earning as well. So if I click on events here, you can see that each earnings date's going to pop up, and you have these vertical lines here. I'll change the color so you guys can see them a little better. I'll just make them black so you can kind of see them probably a little better than the blue. But anyways, all I have here is a simple analysis of, one, when is the earnings date? Well, you can see here this dashed line shows when that earnings date was. And then first, you have the orange box. The orange box is showing us that initially Spotify over the last 4 earnings now always goes down after earnings. So that is the orange area here, showing that initial move down. The next box is the green box, which shows the reversal after we have that earnings capitulation, sell-off, whatever you want to call it. And then you can see here that the blue line here, or this blue zone, is just where we hit a high the day of earnings. And you'll see every single time we have that initial sell-off, we have a reversal, and then we actually blast through the earnings high that we saw. So that's something to keep in mind for Spotify, because what did we have over the last week? We had this huge gap down. We had a continuation down for the last week or so. And now we're starting to possibly have a reversal here. We put in a very slight higher low from yesterday's low. We have this huge price gap above. And, just looking at that same pattern, if we were to simply fill that gap above from where we gapped down from, that's a 25% move to the upside. Now, the timing on that is always a question mark. The overall accuracy of this previous pattern playing out again is also another question mark. But on top of that, we also have June being a very strong month. So is this something that's going to play out into June? Notice that we're only looking back since 2018 because that's when Spotify IPO'd. But you'll see over the last 3 years, June has a 100% win rate. So that's June of 2018, June of 2019, June of 2020, all were green months. So not a ton of data to go off of, only 3 years of data, but it is worth noting that June is historically the strongest month of the year for Spotify, and something I would definitely take into account when looking at this chart that has this pattern on top of the seasonal trends that we're seeing on the seasonality tool on TrendSpider.
That's incredible. That's so cool. I'm definitely going to try this tool out probably this weekend because I won't have a chance during the week. But we have we have enough time for about one ticker from chat, if you don't mind.
Yeah, let's do it.
I mean, everyone's going to get mad at me no matter what I choose. But what about let's do PayPal. I don't want to throw like a penny stock at you.
Penny A, whatever you guys want to look at. PayPal's a good one. PYPL, if I can spell. All right. Daily, any time frame?
Well, let's do daily.
Okay. So our earnings today?
That might be why they're asking.
Yeah, I think, okay, it looks like earnings is today based on this chart. But yeah, so PayPal is one of those ones where as I mentioned, some of the first things I do on a chart that I haven't really looked at in a while is just throw on the auto trends and see what's showing up. Now, one thing I will mention here, these trend lines are popping up because the last time I used auto trends was back in May of 2020. So I haven't updated the trends on this chart in forever. So I'm just going to refresh and lock and see what the system's finding. And you can see there's a couple things it's finding here. We do have kind of this longer term uptrend here that has been invalidated a couple times, shown by these candles below. And then on top of that, not a ton here on that side of things. One thing that you will find with sometimes when you have like PayPal, which is a little bit of a gappy stock, if you have the system ignore gaps in price, sometimes that will change the analysis a little bit. And that's exactly what I was hoping it would find. We have this longer term trend line here that's also holding. So let's turn off the trends in general. And we'll see where we've kind of got these two trend lines, right? So we have this one trend line that I just highlighted from the auto trends here, and we're trading right at it. And once again, right, I literally have not looked at PayPal in a long time. I don't have to go and, search through all this stuff. I just turned on trends and we have this very relevant trend line here. Now, if this trend line breaks, then I would expect possibly a move down to possibly test this next trend line below. And that's something that could happen. Earnings is today, so who knows what's going to happen with earnings. But this is a great example of just using alerts, right? You go in, just right click, create an alert at this line, and then into tomorrow, if the alert goes off, that we probably broke through. So I just click breakthrough. We don't need any sensitivity here because I only want to know when the price breaks through this line. I don't need to know when it touches. When you're using sensitivity, it's just when the price is touching it. But here I just want to know when the daily breaks through. And then I create alert. And then whenever the daily price closes through this line, I'll be alerted. So that's something that you just let the system do. Now, one thing I would also note going into June for PayPal since 2015, and that's pretty much the IPO, June has a pretty
We'll have to make this the last remark, just FYI.
Yeah. Sorry. So yeah, June has an 80% win rate as well. So May has a 50% win rate. So just know that you can use these seasonality features in a different way where maybe I buy the weakness on a weak month and then I sell into a strong month. So there's a lot of different ways you can use the platform. We do have a Benzinga coupon code that you guys can use if you want to try this out. BZ25. It's good for 25% off any plan and a monthly or an annual subscription. So thank you so much for having me on and really appreciate the time.
Jake, you've been incredible. This has been so awesome. What I really like is that I was starting to draw blanks on CLF. I don't know, maybe just a little bit tired, and then you came in with the automation and a brand new tool for looking at it and pointed out a trend line that I would not have caught. So cool, guys. Jake with TrendSpider, thanks so much for joining us.
Hey, thanks, guys. Have a good day.
You too, man. All right, so let's get this. Let's do the thing where we play the song at the end. Thanks so much for tuning in, guys. We are at time. It is 2 p.m. I'm gonna be a nice guy. I'm gonna be I don't know what you call me. I'm a guy. I'm punctual. I stick to the agenda. Big shout out to Jake and TrendSpider. That was some really cool stuff. Thank you guys for the tickers in chat. Will we do a live stream this Saturday? We shall see. Make sure you hit the like on this video if this video gets up to 200 likes. I think we might. At any rate, this has been Get Technical. With us, as always, has been producer AB, Aaron Bree. I'm Neil Hamilton. Happy trading.